If you could own 500 of the strongest companies in America, beat 90% of Wall Street pros, would you? Well, let us show you today how the S&P 500 does all those things and why it's the king of all indexes. Good morning, everybody. Welcome to Money Church. This is another production of the Black Wealth Rebels. I'm Kamari. We got Jimmy. We got Corey here early on a Sunday, as every Sunday we are. But we're going to go over the S&P 500. And of course, Jim has a great presentation for us. So what y'all got going on today, fellas?
Good morning, sir. How are you? First and foremost, how are you, Corey?
Yo, Izzo. I don't know, man. I'm tired as hell. My brain is still foggy as hell. I just woke up. So generally I'm up at 5 a.m. But my body was like, no, dog, get some rest.
Hey, sometimes you gotta do that. Sometimes you gotta do
your
that.
Body. It's the best coach.
Yeah. Coach is like, sit on the bench.
Shout out to everybody tuning in live. If you are here live, please let us know who's here. I see people coming in the room, so please let us know who's here. If you're watching from behind the wall in the village, salute to you as well, because this is streaming in the village as well, which is Black Wealth Rebels. One of y'all sound like y'all got the beginning of Michael Jackson song about to start back there, man.
Don Johnson's in the building early. What up?
Don, what's really good? V-Don is here. What's up, Don? How are you? OCL Sportsman's also in the building from Rosenberg, Texas. Okay. What's Rosenberg close to, OCL? Anybody? I don't know. So, I know Houston, I know Dallas, I know San Antonio. You know what I'm saying? Like, Nate, Grand Nating.
Good morning, King Nate.
Anthony getting it started already.
Already.
Anthony is getting it started already. But
did I see that there's some floods in Texas again? Like this week?
Listen, it might be, man. Something's always going down in Texas. You know what I'm saying? But yeah, so that's what it is, though. Close to Sugarland, Texas, a Houston suburb. Okay, I feel like when I talk to people and they tell me where they live in Texas, it's always like right outside of Houston. I'm like, everything is outside of Houston, yo. But I also have been to Houston and realized that nobody actually lives in Houston. Everybody lives right outside of Houston, though. You know what I'm saying? Hey, Miss Maui's here. Miss Maui, I owe you some sats. You didn't send it to me in the village, though. I think you sent an email. But either way, I'm going to get it to you today. But what I need you to do, you're going to have to resend your Lightning address because I was waiting for it in the village. I don't know if you heard this, but we had the new rules about the people that win have to send it to us in the village. Send us an inbox in the village with your Lightning address, and we'll get it to you. But I know that the way the Lightning address works is that's null and void after a couple of days, so you have to resend it to me. But or you could, Miss Mel, you got my phone number. You can text me. But it's all good, though. We're gonna get it to you today, Miss Mel. I just want you to know I didn't forget about you at all.
So real quick, before we get into today's presentation, since we're talking about Texas, I just saw this and I thought it was wild. Just real quick, the Texas flood washed away debris and dirt. They also uncovered 100 million year old dinosaur tracks. How wild is that? Jeez.
Hold up, they did what? I heard you, but I was like, hold up, they did. Oh.
They also uncovered 100 million year old dinosaur tracks.
Come on, man, is that real? I mean, I know that they say. Anyway, man, that's wild, bro.
Yeah.
How big were the tracks, though? I need to see that, man.
Listen, I just saw that and I was just like, wow. Because I know Corey is always talking about the floods in Houston and Texas, and I'm seeing the reports. And then I saw that, I'm just like, geez.
Yo, Corey was in a flood a couple years ago, and he like called me during the flood and was like showing me the footage of what was going on. I thought Corey was going to meet the ancestors, dog. It was like water was coming down the street.
That wasn't a couple years. That was last summer, bro.
Yo, cars.
2 summers, right? Wasn't it 2 summers?
That was not this summer that just passed, but the previous one.
Right, yeah.
Yo, I was like, damn, dog. I was like, it's funny because he's like, yo, there's nothing you can do to help him. Like, you know what I'm saying? This cars rolling down the street. I was like, yeah, man. I think I'm gonna stay up here in 4 seasons. You know what I'm saying? Like, I need my 4 seasons because it was kind of wild.
Anthony, you are spot on. Real life Jurassic Park in Texas. It's wild.
Well, Jurassic Park always scares me just because I can see that happening because
people are idiots and they do stuff like that. Yeah.
No, success have an issue, but also people with scientific minds because you always want to learn and know more. So you start to push the limits, right? When you push the limits, you try things. And I mean, it's also the reason why a lot of people are nervous about what's going on in the world, bringing everything back to the point, what's happening with AI, right?
Yep.
Because the human mind, it just pushes and pushes and pushes and pushes. Hey, Liz, how are you?
Morning, Liz.
Yeah.
Liz is in the building.
So that's why that AI is scaring a lot of people. But the fact of the matter is this: when it comes to AI, I feel like a lot of us need to really embrace it, man, because I'm speaking at a conference, 2 conferences actually, but the thing about it is all the different AI presentations at these conferences, like other cultures and people are embracing it in a way that we better learn, because not only will it be a loss of jobs, but there'll be a creation of jobs too, but it'll be new jobs. Like the idea, and I heard you talk about this too, Kamari, the other day, when you was on the other show, like even the idea of being a prompt engineer is a real thing, right? And I don't know how many of us are prepared for that. Like,
I mean, so I agree with you 1,000, 1 million, 1 trillion%, because, we always talk about Black people are always the last to get the stuff. But part of that is self-inflicted because we refuse to be curious and get into it and play around with it.
Man,
a lot of times other people don't.
Speaking of prompting, man, the king of prompts is in the building. Shelby's here, man. Yo, Shelby be having prompts, dog, that's like 7 pages long, man. So shout out to Shelby, man.
Yes, he does.
Yeah, man. So we got a professional prompter in the building, but that's a real thing though, man. But this morning, we'll do a quick class. Today we're going to talk about the S&P 500. And the reason that this is going to be a class, and I don't know if Jamil is here, our brother from Detroit, but I started writing out the REIT versus real property presentation, and it's almost done.
Supposed to do that.
Listen, I already started writing it out.
Well, it's supposed to be a presentation now.
Well, it's going to be a class. It wasn't that wasn't one of our verses. That was actually a class. He wanted us to do a class on REIT versus real estate. So whether you want to do that.
Yeah, but what it was supposed to be is helping me decide what I want to do.
Okay, so I don't have any of your personal information in the presentation. I was just writing out pros, cons, and going back and forth between the two. So I started scripting that out. So that part is already worked on. But this became a presentation because I was having a conversation with someone in the village about the power of the S&P. And they were asking questions. And I realized throughout the questions that were being asked, like maybe it's something we should talk about. Because a lot of times we just refer to it in all of our other classes. We just say S&P. We just say S&P, S&P. We never explain what it is. And we never really talk about exactly how or why it should be used in someone, structuring their portfolio. Now, before I get into the presentation, I do want to say this, that anything I say here is for educational, informational purposes only. This is not investment advice. But for the folks that are in our village, and for those who don't know what the village is our community where, we, curate, cultivate, and have conversations. We do live trading. We do all kinds of other stuff. There's a lot of free classes back. Well, not free. There's free classes, and then there's classes for our members. You have to be a member to get a lot of our classes. So some of those classes include real estate classes, real estate valuation classes. A lot of Bitcoin information is back there. Stock market information is back there. We have a whole Options 101 series. So with that being said, though, today we are going to talk about the S&P. Y'all ready? Y'all ready for me to get busy?
Come on, DOC. Y'all ready for this? Yeah.
Hey, listen, man, no one could do it better, but I digress. All right, so listen. Today we're going to talk about the S&P 500 and why we believe that it's the king of all indexes. So the S&P 500 tracks the performance of 500 of America's largest publicly traded companies. This represents 80% of the total U.S. stock market value. So this is for investors that seek reliable benchmarking. Also, it's a great investment vehicle. And if you understand this index, you can build long-term wealth with it. Now, the one thing I want to clarify, and it's interesting because we talk about this within our summer camp for the youth. And we spell this out because, a lot of times when we talk to the kids, we ask them about specific companies. And a lot of them love Samsung. So they'll say Samsung. And we say, no, it's not a member of the S&P 500. The S&P 500 is America's largest publicly traded companies. Sometimes we forget that, it's a big world out there, right? And a lot of companies aren't on the American Stock Exchange, but this is America's largest publicly traded companies, not the world. So there's a difference. But it is. So, and some will make the argument that having 500 of America's largest publicly traded companies still gives you international exposure Because if you look at the top of the food chain in terms of the S&P 500, most of those companies operate on a global scale anyway. So although they're American companies, they have operations all across the world, right? If we look at the big boys, right? So like Apple or Nvidia or Microsoft or Google or Meta, just some of the top 5 companies within the S&P 500. And we'll talk about the S&P 500 overall, because what's interesting about the S&P 500, and this is some data that I just looked up yesterday that I didn't even put in this write-up because I had already written this. The S&P 500 low-key is being held up by the top 10 companies, right? So if you look at our overall economy, and a lot of people believe our economy is doing great, our economy is kind of being propped up by 10 companies, low-key. And I had the data to prove that. But let's move on with this presentation specifically about the S&P 500. So let's talk about the history. So it started in about 1957. It was started by Standard & Poor, and it revolutionized market measurement. So it's the first true market cap weighted index, right? So the market cap of the specific organization is how it makes the S&P 500. So while the components have changed over time, this purpose remains constant, which is tracking America's economic leaders. Now, this is going back to 1957, and now it's the number one benchmark that people use in terms of seeing how our market is done. And it's a lot of cycles. If you remember, well, a lot of you guys were around then, I wasn't investing in, but, I was in the world in 1987. But during Black Monday, it was a 22.6% single day drop in the S&P 500. By the way, it's a great show on Black Monday with Don Cheadle. But that's a whole side note. That's more for a Friday conversation. The dot-com bubble burst. I was actually investing in the market personally doing that, right? But we saw a 49.1% decline in the S&P 500. During the financial crisis, which was between 2007 and 2009, there was a 56.8% collapse within the market. The crazy part is when you look at the dot-com bubble burst and the financial crisis, you're talking about a difference of, maybe 7 points. But it felt completely different. And Kamar, you were around for both as well. You're my elder. So I say that to say
slander.
You were around for both of those, right? But I remember both vividly, right? But the financial crisis, even though it's only 7 points, it felt completely different. Would you agree with that?
Well, they were both completely different. They were the same, but different at the same time.
I'm talking about when you're talking from a percentage standpoint. It was only 7 points.
No, I got you. But the thing was, the financial crisis impacted so many other things. Like we had a whole lot of companies go bankrupt. You had the real estate fallout. So the global economic magnitude was much bigger. But 7 points could be a lot, and people don't realize that. No, 7 points is a lot. I mean, think about it this way. A lot of times when the job numbers come out and we talk about the unemployment rate, and it's people like it's like 6%. People are like, oh, it's only 6%. I'm like, no, that 6% means something, right? When you look at this boy trying there, bro. Are you over there overproducing? Come on, dog. What you doing? By the way, this is Kamari, y'all. I have no idea what Kamari is doing right now, but he's doing too much. All right. Anyway, with that being said, those 7 points made a huge difference in terms of how things felt and what was happening in our overall economy. A lot of it also is because of the specific industry that was affected. So when you talk about real estate, and we talk about real estate a lot of times in a vacuum, but real estate is a huge industry. When you look at all the jobs and everything that surrounds real estate, another thing we talked about in the camp with the kids, when you look at real estate, we could talk about real estate, the asset in terms of an investment, but think about the various jobs that just come through the real estate industry, whether that's mortgage banking, whether that's realtors, whether that is roofers, whether that is electricians, whether that's plumbers. In fact, it's funny. I was just, going back to this book. I was reading this book called All Roads, I finished the book, by the way, All Roads Lead to Real Estate, written by our sister, by the way. Shout out to Erica. Erica wrote this book. And I was going back through it last night, and she was talking about how other cultures have embraced some of those trades in order to build the real estate portfolio. But she goes through a lot of the different trades that surround real estate. So when real estate was affected the way it was in a financial crisis, when you had properties to stop moving in that huge bubble burst within the real estate market, it affected all of those various jobs, whether that's, more jobs, appraisers, real estate attorneys, title companies. So that 7 points was a huge difference. But the point is, going back to the S&P 500, is that throughout the years, and then we talk about COVID-19, there was a 33.9% crash of the S&P 500. Now, that's just 4 time points that we saw huge crashes.
Now, the one thing that is consistent with all of those points is there's a recovery, right? There's a recovery, which is why when we talk about investing, when we talk about doing it over the long term, which is why it's really the safest thing you can do is be a long-term investor, because even if you were in the market, own the S&P during Black Monday, you would have recovered, right? Then the dot-com bubble comes up a couple of years later, you would have recovered. It made more, by the way. 2007 and 2009, you would have recovered. COVID-19, you would have recovered. And the other part about it is another reason we teach DCA, which is dollar cost averaging, is because if you're purchasing during these time frames, guess what? Now you're making money. So this is how the S&P 500, it can be very powerful. So the first part about the S&P 500 is US-based companies. They have to have a market cap of at least $15 billion and profitable in their most recent quarters, right? So these are highly liquid shares with a reasonable price. So these companies are the most liquid companies on the market. The public float has to be at least 10% of shares. Some of the criteria to make the S&P 500. Now, when you look at the sectors that are represented in the S&P 500, it's broken down into 11 sectors. We actually did a full class on the various sectors and all that. So you can go back and take a look at that. But it's technology, right? So 28.7% of the S&P is made up of technology. 12.8% of healthcare companies, 12.6% financial, 10.2% consumer discretionary, and there's 7 other sectors that make up the remaining 35.7%, but those are the biggest sectors. You can see by far technology is what dominates our economy overall and what dominates the S&P 500 because it's more than double the next closest sector because it's made up of our biggest companies, right? NVIDIA, Apple, Microsoft, Google, Meta, and Amazon. These are the companies that tend to dominate the S&P 500. I think in the top 10, there's only a couple companies that aren't tech. I know, JP Morgan Chase is number 11. Berkshire is in the top 10 as well, right? So Berkshire is up there as well. But most of the top 10 of the S&P 500 is made up of technology companies, and the overall index is made up of close to 30% technology companies. So what should that tell you about sectors we need to be in right now, right? Which is interesting because I've mentioned this before. I've done the research and went back in time and looked at the different sectors that dominated the S&P 500. And when I got back to the 80s, it was completely dominated by oil companies. The same way technology dominates now, the oil sectors have dominated back then, which is why a lot of people make the juxtaposition of technology and oil, and they say tech is the new oil, right? Because literally from an economic standpoint, it has replaced oil in terms of its domination. Now, the top holdings, right? Apple, Microsoft, NVIDIA. When I wrote this, it's probably changed because this shifts all the time. I think NVIDIA is actually number 1 now. But, it tends to shift all the time. But the point is, these are all tech companies. These are all tech companies. That's the great thing about it, right? So I write these presentations sometimes months in advance, the weeks in advance, and things change within the market. But over time, it's still the same thing. It's just that within those top 10, because NVIDIA, Apple, and Microsoft have been flipping spots in terms of being number 1 over the last year or so, which is crazy because NVIDIA, if you go back a couple of years ago, it was Apple and Microsoft have been dominating literally for years at this point, right? But NVIDIA came out and it's like, no, this is a 3-man race now.
It's funny. At one point they were flipping daily, but then NVIDIA just kind of took over.
NVIDIA said, "I'm the captain now." That's what happened, right? So, I saw something the other day. It said that almost a third of NVIDIA employees are worth $20 million.
That's bananas.
Yeah, and they have like more than half of their employees are millionaires, but like a third of them are worth more than 20 million. Something crazy, like it's ridiculous, right? Anyway, so this is why I laugh when people say, you can't get a job. Okay, tell that to people that work at NVIDIA. But I digress, right? So anyway, so the previous indices that were used were, the Dow Jones was the big boy, right? The Nasdaq, something that's also used. The Russell 2000 is also used. But they're a little different. So the Dow Jones is made up of 30 companies, which is why some people say that's not enough to really get a gauge of our economy. It's also price weighted. Remember, the S&P 500 was the first that is weighted by market cap. And it has 500 companies, and it's broad, diversified, and it represents the U.S. economy. The Dow Jones is the oldest. It's been around forever, right?
That's the daddy. That's the granddaddy.
Yeah. It's old, but it's least representative due to 30 stocks, and it's flawed weighting because it's price weighted.
But it's funny, right?
Go ahead.
It's funny, right? Because the Dow was again created to track the economy. Mm-hmm. It kind of did that. So
No,
does the S&P 500, right? And there's
well,
only
in its
you don't
time,
need
of
that
course.
many.
Well, you got to look at the history of it all, right? So in that time, 30 companies probably could give you an indication of how everything was going, right? And our economy wasn't as global then as it is now. So a lot of things changed.
What did you just say? The top 10 in S&P 500 or your top T, right? It's still 10 or 20 that's still pushing everything.
Hey man, listen, man, it's like it's like the NBA, man. It's always going to be top heavy, right? It's always going to be top heavy or a beautiful woman, but I digress. The thing is, the Dow Jones used to be the granddaddy of them all, and the fact is that but it's price weighted also kind of skews how it's used. The Nasdaq, on the other hand, it's about 3,000 companies. It's very heavy technology. It's very heavy with technology. Now, some will tell you that in today's climate, that's enough because technology dominates the way it does. I can just look at the Nasdaq. But some people like buying the Nasdaq. The Qs, people love the Qs, right? There's also the Russell 2000, but the Russell 2000 has a small cap focus, so that has higher volatility, right? But what comes with that higher volatility is sometimes a higher growth potential.
Now, so, Jim, let me step in for one because we had a question and I think it's relevant to this part, right? So Falcon Strike 21 asked about SPY or RSP. They're both ETFs that track the S&P 500. One is equal weighted, which is RSP. The other one, SPY, just follows the overall index. RSP lags SPY a little bit, but with the overall equal weighting gives a little bit more protection with air quotes, right?
So it's more conservative, right? So I would take VOO over either one of them, but that's just me. But I'm looking at expense ratios, and there's a couple different ways, and I talk about that later in the presentation, different ways to get access to the S&P. But I understand why I pick one. So here's what I would say. That's why personal finance is personal. If I'm approaching retirement and I'm older, I may be more on the RSP side, right? If I can, stand a ride that has more ups and downs, I would be more SPY or VOO. Personally, and I'm going to talk about this in a little bit as well. I'll tell you guys what I personally do in terms of the S&P. Everyone knows who watches us every week and watches all of our shows that my favorite holding on the entire stock market is Top T, which is kind of taking from the S&P. So for those who don't know, TOPT is the ticker symbol. I got
hold on. That is not investment advice, y'all.
No. Not investment advice. It's not investment advice. But I talk about this often in the village too. It's what I invest in, right? I do invest in the S&P 500 over, and I'm going to explain how I do both. But the Top T is my favorite individual ETF. What it does is it takes the S&P 500 and it gives you the top 20 companies in the S&P 500. But again, if you heard what I said in the beginning, the S&P 500 is dominated really by not even 20, by 10 companies. So I'm getting the exposure to all that. Now, the risk that comes with that is when there's huge drops, I'm going to see heavier drops than someone who smoothed it out with the S&P 500 and someone who smoothed it out even further with RSP. But when we going up, we going up.
That's when you're going down, you're going down. And so, like for me, I do like RSP. I used to use it a lot when I was professional because, again, like you said, it smooths it out. And so I'm never worried about if we're going to win, right? Going back to the story of Rick that we did a few weeks ago. I just want to get there as smooth as possible.
Listen, man, I love the Phillies, right? I'm a huge Phillies fan. I used to have season tickets to the Phillies. I don't have it right now, but I used to have season tickets to the Phillies, man.
Stunt 101.
Stop it. A couple years ago, that's just the Eagles. The Phillies had a player. His name was Ryan Howard, right? Ryan Howard is an all-time Phillies player. But what is funny about Ryan Howard is Ryan Howard was either going to hit a home run or he was going to strike out. He wasn't about that. I'm hitting singles. He wasn't about that life. Like, I'm going to hit a home run. I'm going to strike out, right? I say that to say this. When we hit, and he hit a lot of home runs. So the thing about it is, as long as I have more of those, and it's funny, he mentioned about Amazon being consumer discretionary, right? That shows how mature the company has become to now people are putting it in that consumer discretionary box. To make the consumer discretionary box is wild. But Amazon you still will find them on the tech side as well. But I say that to say this, Kamari, when right, you hit the amount of home runs the S&P hits, even when you have those things that kind of those fall offs, you'll still be up over the long period of time. And Willie Falcone, sorry, I've listened too much of the clips. But Willie Falcone is making a great point in the chat too, though. You have to stay invested. That's an excellent point, because all those drops that you've seen, if you would have sold, which a lot of people did when it recovered, you would have missed the recovery. That's why long-term investing is the key to all of this. Long-term investing is the key to all this. Even when we talk about options, we take a more long-term approach. You know what I'm saying? And I know people in the village like, yo, you just told us about a swing trade you took a couple days ago. Listen, man, I'm not perfect, but I digress. So I did take a swing trade.
Not to mention your weekly, daily smack ups of
SPY.
SPY.
Oh, listen, me and SPY run on a daily basis, but I did take that IBIT swing trade just because I saw BTC fall below, like at the time, like 113 or something. So I was like, all right, anyway, I'm up right now, because right now
hold on. You took that in hard shares or an option?
Options. I bought an option. I bought a October. It ends in October. IBIT swing trade.
And did you share that with the village?
I shared it with everybody. I shared it on I shared it on the air. I share everything.
I don't remember that. Okay.
Because you gotta get back there, man. You know what I mean? They'll be back there chopping it up, man. What's wrong with you? Anyway, let's get back to the presentation, right? So the S&P 500's methodology strikes an optimal balance between comprehensive coverage and practicality. Its market cap weighting ensures the most economically significant companies have the greatest influence. So it's considered the gold standard benchmark for institutional investors worldwide. And you'll hear about this all the time. If you watch CNBC, if you watch the news, they report on the S&P 500. Sometimes you still hear the Dow here and there, you know what I'm saying, because we won't fully put that to sleep. But the S&P 500 is the overall benchmark that's being used for the most part. So the S&P 500 also can outperform most fund managers, right? And this is something that Warren Buffett often talks about, and it's been proven over time. And statistically speaking, it beats about 90% of professional fund managers. So over 15-year periods, approximately 90% of actively managed funds underperform the S&P 500 despite employing teams of analysts and portfolio managers, right? Kamari can tell you because he used to be one. So anyway, so the index, we call it, they say automatically adaptation. That's one way to put it. I call it self-cleansing to just make it easier to understand. It's self-cleansing. The index naturally evolves as winners and losers shrink. Declining companies are eventually replaced by rising stars. So it creates what's known as a survival of the fittest mechanism. An example I would give of this, if you go back in time and look at the S&P 500, companies that were once a member of the S&P 500 include things such as Sears, Blockbusters, companies that are with the ancestors now, or holding on. So, but now they've been replaced by things such as Netflix, right? Netflix is a member of the S&P 500. Tesla recently made the S&P 500. All these different things that so it's self-cleansing. So when you buy the S&P 500, as an ETF or a fund, you're kind of getting that self-cleansing. And I know Don is watching, and Don is a big proponent of ETFs and just buying them and chilling, right? And the last part I want to talk about is the zero emotional bias. The index itself doesn't panic during crashes or get greedy during bubbles, such as actively managed funds tend to do. This mechanical approach avoids the behavioral mistakes that plague individual investors and active managers. I've said this time in and time out. Do we teach about options trading? Absolutely. Do we trade options? Absolutely. But do I think that most people should? Absolutely not. I think I'm going to keep increasing. I started at 90%. Now I'm going up every week, Kamari. Right now, I think I'm at about 97. 97% of people should just buy the S&P 500 and go enjoy their life.
Just say 99 and be done with it, man.
I'm going to get there eventually, man.
It's all about being a part of the 1%.
Give me more time to get there, bro.
Be part of the 1%, bro.
I want to get to there.
Got you. But Don, there's a couple good questions. We're going to get back to them at the end of the presentation.
Yes, sir.
I wanted to do this real quick. Mrs. Phoenix 91. Thank you for the
Miss Phoenix. How are you, Miss Phoenix? Appreciate you.
And we will come back to that as well and answer that as well.
Yes. Ooh, the Palantir question. That Palantir is run by one of Corey's schoolmates, but I digress.
By the way, if y'all didn't catch that, Jimmy and Corey both had the same schoolmates.
Yo, I'm about to say, Jimmy trying to roll me under the bus. Like,
wait. When it's nefarious activities, that's your school, but I digress. So listen, though.
Oh, wow.
I'm joking.
Jimmy's set tripping right now, yo.
I'm joking, y'all. The power of 10%, right? So the S&P 500 has delivered an average annual return of approximately 10% since its inception in 1957. Before Kamari says anything, adjusted for inflation, it's about 7%. Because I know Kamari is going to say so. I added that last part in just for Kamari, because I know he's going to troll me if I just leave the 10% out there.
No, actually, I wasn't going to say nothing, but I was going to say and I know we're talking about the SP 500, but even if you roll into the Dow, the market overall has still done between 10 and 12%. So
yes, but adjusted for inflation, that's 7%, right?
okay.
So this seems like a modest return, but it can create extraordinary wealth through compounding, right? So $10,000 invested for 10 years turns into 25.9. For 20 years turns into 67.3. For 30 years, 174.5. But for 40 years, 452,600. Now, the great thing about that is, right, we teach the rule of 72 to the kids all the time because it's an easy way for them to understand compound interest. But who's to say that you only need to put 10,000 in, right? That's just 10,000. What if you put 20,000? What if you put 50,000? What if you like Kamari and you put 500,000, right? All right, I'm gonna stop doing that, Kamari. You told me to
want to get me wrenched, man. I told you about this already, man.
I'm gonna stop. Hold
on. We got to
stop talking about your wealth.
For the record, Jimmy is joking. I ain't got no money. I'm broke, baby. All right, just for the record. Stop playing, man. Stop playing.
Listen, man. Don't lie to the folks, man. I try to be transparent with our people, man. Kamari got the chicken, but I digress, man. Listen, you got to reinvest your dividends, though, right? S&P 500 currently averages about a 1.5% yield, but if you reinvest the dividends, it's how you maximize your returns, unless you need those dividends to live off of. Like, again, it's all personal finance is personal, right? So those dividends you may need for different reasons, but if you reinvest the dividends, it's how you maximize your returns. But again, you don't have to have 10,000, right? You can have 20,000, you got 30,000. But the idea is to watch it compound over a period of time, right? You just can't look at this and say that I'm going to do this for 3 months. I laugh at people who like get started in investing, right? You know, people who are just getting started, and then after like a couple months, they be like, all right, so what's going on? Like, you know, my 10,000 is like, you know, $10,050. Like, what am I supposed to do now?
So, Jimmy, to that point, every week with Michael Chorn and Jay Black, I had them invest $10 into VOO.
Okay.
And every week, Jay Black's like, man, it's not moving fast enough. It's not moving fast enough because he wants everything to be a flip. A lot of times I feel like drug dealer mentality has seeped into the mindsets of the people. So we think everything's going to be a quick flip. But that's
I think that's an actual deeper discussion, right? Because I understand you're calling it drug dealer mentality. I get that, right? But there's the other part about it too, right? The other part of understanding what it's for, right? So
what for?
What the actual capital is for. What is money, right? So when you understand what money is and understand the purpose of money, it being a tool, you kind of take a step back and look at it a little bit different. If you're so focused on, I need to flip this money so fast because I want to buy X, Y, Z, you're going to be caught up in that forever.
Well, most people don't look at money as a tool. So again, that conversation is for us nerds, us money nerds.
Point.
Yeah.
No, that is actually my point, though, right? Yeah. Again, and I've said this a gazillion times, I'll consistently say it. Yeah, you can go, somebody can make a compilation of all of our classes where I say the same thing, because I say the same thing a lot in terms of most of y'all don't need to be doing anything else but the S&P. In terms of what money is. Also, the last thing I always say is when you buy stock, it's not just some crazy number that's out there. It represents ownership in a corporation, right? But the other part that I always talk about is the fact that money to me is time and energy. Money is time and energy. So when you talk about storing time and energy that can be used at a future date, when you think about it as time and energy, it changes things because what you're doing is you're not looking for quick flips. You're putting time and energy to the side that you can be used for an emergency. Maybe you never need to use it. Maybe it goes to the next generation, but they have this stored time and energy. So that's less time and energy they have to allocate towards their labor, right? So, you know, our entire economy is made up of pretty much labor. Labor is the number one energy source, right? So in order to create anything, you need land, labor, capital, and entrepreneurship and management, right? So one of those four things is labor. So when you're able to store that amount of labor and energy to the side, it could change someone's life. People think about this money and these investments in such grand numbers because of social media. They like, I need 50 million or I need $1 billion, right? People don't understand how much $1 billion actually is. The difference between $1 million and $1 billion is like night and day. But when you take a step back and think about it, if someone would have left you in a position where you could have had $1,000 a month before you get out of bed, how does that change your life? Forget $1,000, right? Let's get even smaller. What if you had $500 that someone left you where you're making $500 a month before you go to work? How would that change your life, right? And when you think about it that way, because someone has stored this time and energy that has the ability to create more time and energy, then, you know, now you'll take a more long-term approach. You know what I mean? I'm a student of Mr. Earl, Kamari. So that's what Mr. Earl teaches us, man.
Okay.
All right. Now, there's risk, right? Volatility reality. S&P 500 experienced multiple bear markets, 20+% declines is what we consider a bear market, including 6 drops exceeding 30% since 1957. The average intra-year decline is about 14%, even in positive years. So, with that being said, again, if you hold for that time period, you'll be fine. U.S. concentration, we talked about it. The index provides no exposure to international markets, which represent over 40% of global market cap. This geographic concentration can be a disadvantage during periods of U.S. underperformance. That is true. However, when you look at these top companies, right, they're global companies. And I know that's always the counter argument. I see this a lot in the Boglehead community, right? And for those who don't know what the Boglehead community is, we just talked about that a couple of days ago. But within that community, I see arguments a lot of times like, why even have an international fund? Because I have, all these companies that operate internationally, right? So it's a sector imbalance as well. Technology and tech adjacent companies now constitute over 30% of the index. So this concentration increases risk if tech itself experiences a prolonged downturn, which happened in 2000 to 2002. So also future returns, the current valuations, PE ratio, which we've talked about, which is 25x within the S&P. And for those who don't know what PE ratio is, price to earnings ratio, we have a whole class of price to earnings ratio. They're historically elevated. So many people believe that over time we'll now have 6 to 8% annually because of how high these PE ratios are. So historically it's been about 10, but many people now, and the funny thing about it is I've seen this from analysts over time, and it's almost like they want to be super conservative, right? Just to protect people. But the fact is we haven't seen it get to that point as of yet. It's probably even a lot higher than a 10% more recently. And that's another thing too. We've been in such a bull market over the last decade and a half that people don't even recognize that that's not the norm, which is why you have to live through a downturn to understand how things actually work, right? The reason
Kamari real quick.
The reason Kamari doesn't have any hair is because Kamari's been in the market for 30 years, so he has went through. You know what I'm saying? I'm
not even gonna talk to you anymore, man. I'm just gonna speak to you through Southbound to me.
Now listen, bro, it's all love, man. It's all love. But listen, though, I'm giving you props though. You've actually seen the other side, right? Some people who just started, a lot of people started investing during the pandemic, right? Mm-hmm. So they haven't seen what it's like when you look at your account and you're down $1 million, right? A lot of people don't know what that feels like, or you're down 6 figures, or you're down $10,000 or $5,000, right? You know what it's like to
Listen, man, I got cussed out several times during 07, 08, and 09. I mean, I've had several people say, man, the money I lost in the market could have been a remodeling of my whole home, a new kitchen, a new bath. I mean, people were really upset in their feelings. But nobody has called since then, since what was it, is it March 6th of 09 when the market rebounded? So now, because it has not really gone down. We have been in a constant up market.
But that's what I'm saying. Like a lot of people just don't know what that feels like. Once you go through that and then you recognize that you will rebound. So it's also why a lot of people who've been in the markets for a long time, when everything happened with COVID, they were fine because you realize I saw people like that have been through it for a while. They start dumping more into it. They start going crazy, right? It's also why you see a lot of people who are experienced keep and it's going to make Kamari's day. They keep cash, right, to the side.
Cash is king, baby. Go ahead.
So listen, but this is my cash, but I digress. The point is you keep cash to the side, right? So when you see a huge downturn, when you see one of those 20+% declines, you just come in heavier and get more, right? So, it's interesting watching even what Berkshire is doing as a company as they trim off a lot of their holdings and realize right now they have more cash than they have any of their holdings.
Yeah, in fact, like that for a minute, right?
No. If you take the top of their portfolio, they have more cash than everything else. It's kind of insane.
But that's been like that for over a year, right? I believe.
No, not as it is recently. I'm talking about where you take all the equity they have in their top. I forget what number it is, and they have more cash than that because they've actually went more cash heavy over the last year. Anyway. So how do you invest in the S&P 500? There's a number of ways. We talked about a couple earlier, right? So the most efficient way is through low-cost index funds, which are also available as ETFs, exchange-traded funds or mutual funds, right? So examples would be SPY, which we mentioned, VOO, which we also mentioned, IVV, which are the iShares,
RSP,
which are the equally weighted. We talked about that. The ones over here, though, the expense ratio is fairly small, specifically VU. I think SPYs came down as well. So all of them at this point, because everybody's chasing each other. So they're all trying to get more capital under management. So they all compete. Mutual funds, VFIAX, right, which is the Vanguard 500 Index Fund. We also have FXAIX, which is Fidelity, and Schwab has one as well. What's interesting about this is, right, so easiest way the dollar cost average into one of those, right? So that just means that you take a fixed amount, and regardless of the market conditions, you regularly put it in, whether that's every week, every 2 weeks, every month. It's the recommended approach for most investors is to just dollar cost average. Now, whether you buy the ETF or the mutual fund, that also depends upon which type of account you're buying it in, and we could talk about that as well. Because for Kamari again, put the word tax up there. Kamari might go crazy, but tax efficiency. So if you hold the S&P 500 funds in a tax advantage account, such as a 401k, IRA, Roth IRA, 403b, 457, all the various retirement accounts, for lack of a better term, they're more tax efficient to hold them there, right? Now ETFs. Now people gonna say, should I do the ETF for the fund? Depends upon how you hold it. And this is something that actually Kamari and Courtney broke down to me one day, and they went through the numbers and made me realize that the ETFs, if I'm not holding them in a retirement account, then it's actually more tax efficient to use the ETF. Which is why if you're not putting them in your IRA or your 401k, then you're probably better off buying the ETF if you're buying in a regular brokerage. If you're buying it in a tax efficient account, you can buy the mutual fund, right? So the rebalancing strategy, the S&P 500 is one component of a diversified portfolio. Establish a regular rebalancing schedule. So annually or when allocations drift by 5% to maintain your target asset allocation. So I'm asking you, Kamari and Corey, how often do you look at your portfolio in terms of rebalancing, if at all?
I look at mine quarterly.
Kamari?
In terms of rebalancing?
Yes.
Quarterly to semi-annually.
Okay.
As a benchmark quarterly.
Okay. So if I'm being honest, I look at my portfolio like once every hour, but even when the market's closed, because I'm sick like that.
But not to rebalance, right? I mean,
no. In terms of rebalancing, if I'm being honest, I rarely rebalance because I don't have that many holdings. I rarely rebalance. I ain't gonna lie.
You said you got 3, right?
I got 3. The majority of my portfolio is in 3 ETFs, and I have a huge position in a mutual fund, which is the S&P 500, and then I got like a bucket of the speculation bucket, and that's kind of it. So anyway, the idea of timing the market is always funny. So research shows that attempting to time the market reduces returns for most investors. Focus on time in the market rather than timing the market. So during market downturns, maintain or increase your regular investment. The best time to invest in the S&P 500 was 20 years ago. The second best time is today or tomorrow when the market opens, right? So again, long-term approach. Everything we talk about is about taking that long-term approach. So some key takeaways about the S&P 500. It's instant diversification for those that are looking for diversification. It's a 10% annual average return. It consistently outperforms 90% of actively managed funds. You can get low-cost ETFs and mutual funds, which are accessible to all of us. And it's best for people with a long-term horizon. And when I say long-term horizon, it's 10 plus years. It's 10 plus years. So in our investment club, and all 3 of us are members of our investment club. So is Don. Don's in the chat. Don's a member of our club too.
Shout out to Don.
Yeah, shout out to Don. One of the things that I debate with folks a lot of times in our meetings is when we have a new item that we want to invest in. I say if we're not willing to hold it for 5 to 10 years, then we shouldn't buy it. I believe that. You just shouldn't buy it. If we're not willing to invest for 5 to 10 years, then we shouldn't buy it. The S&P 500 to me is something that I'm going to hold forever. There's no time frame on that investment for me. That's just going to be a part of what I have. It just is what it is. So with that being said, that's what I have on the S&P 500. I know Kamari has been looking at the boards, and I haven't seen anything.
Yeah, we got a couple questions. So Don is
super chat.
Yes, I'm getting to him. So thank you again to Mrs. Phoenix. She says, in her honest opinion, Palantir will eventually replace Tesla in the SP 500, the top 10% holdings. I don't know if it's possible. I mean, all the government work, and it's funny how much I'm going a little political, y'all, but it's funny how political contracts impacts this. But I'm sorry, corporate contracts, not political contracts.
Yeah. So I'm trying to pull up the top 10 holdings right now.
For S&P,
Yeah, I'm trying to see
SPY.
what the top 10 are. I'm on Yahoo Finance now. Just looking at the top 10.
You named them. Microsoft.
Off the top of the head, yeah. I just want to make sure because again, things change, right? So I just want to make sure that all right, here we go. Holdings, SPY. So Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Berkshire, and so Tesla would be like the. So I can see why she says that, right? Because Tesla is, I don't want to say holding on by a thread, but they are
smacked around.
Yeah, they are. They could be falling. I mean, look, they're at the bottom of the 10, right? And them and Berkshire are tied. But I think Berkshire being there is interesting in itself because Berkshire is a holding company. So that's what makes that just crazy. But all right, so could it replace Tesla? That's possible because, again, to Kamari's point, the value of those government contracts, the government creates so much wealth that people don't understand. And I realize that a lot of people didn't understand how much wealth the government creates through this new administration and all the different cuts that they're making. And people that told me that they don't work for the government, but they work for a private company, but didn't realize that that private company was being funded by the government. So when they got laid off, they're like, oh, a lot of people didn't realize where the money that their company operates with, where it comes from. And to your point, though, Palantir has been getting contracts left and right. They've been getting contracts left and right. And it's interesting to watch it also because now it's almost performing like a meme stock at this point.
Yeah,
so what does that mean long term? Long term, I don't know, but I can see, why you would say that.
I mean, I think it's going to be around for a while. It's not a problem. But but I guess to me, the one company that stands out, like you said, Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google. Oh, actually, Google's got both Google A and B on Berkshire. But Berkshire to me is the most fascinating.
No, it absolutely is.
They're not playing anybody's game. They don't care about quarterly earnings. They don't care about any of that.
We pulling up on the shareholder meeting this year, right?
I mean, I brought my share. I brought my share.
You put the A share. I know you put the A share.
Listen, you're going to give me wrench and stop playing. I got a B share. I will show y'all. Matter of fact, I will show y'all.
No, you ain't got to show nobody nothing.
I will show y'all.
For those who don't know, Berkshire has A shares and B shares. Show everybody what an A share is worth right now.
All right, hold on. Give me 2 seconds. Anybody want to guess how much an A share is?
What do you think of one share of Berkshire A share? What do you guys think it's worth? I know actually somebody in I forgot who it was. Somebody in our chat actually has one.
Yeah, I think yes. Yeah, they brought it a long time ago, but they still got it.
It's not me. I'm broke. I don't have nothing.
Well, you said in the chat. You're not in the chat, Jimmy. You're not in the chat.
All right, so Jay Sim says $85K for one share. Don says $700K for one share.
Okay. What else? We got somebody else, right?
We got $700K and $85K are the two guesses that we have.
So, all right. So if Don was the betting man, he would be the betting winning man.
I don't know. He went over though.
Yeah, but he's the closest, right? 600.
Yeah, but he went over though. This is like the Price is Right, dog. You can't go over, dog.
No, it's not like it's the closest. There's 85K to 700,000. All right, Rich had 700,000 too.
Yo, you can tell Jimmy spent a lot of mornings.
That was my grandma. That was my grandma.
I was about to say it was my grandma. Yep.
Listen. I know because I spent a lot of mornings watching TV with my grandmother. So,
my grandma's two favorite shows were that, and she loved Jeopardy too. So
nobody like As the World Turns.
No, my grandma was a General Hospital. You know what I'm saying?
So was mine.
I mean, shout to Victor Newman and all that. Victor Newman was getting that chicken back in.
Well, Victor was As the World Turns.
I know, but I'm saying she watched it.
Was different. Yeah,
I know that's what Tina and Eric. No, I'm sorry. You about to have me going to my memory back. But yeah, so those all those were grandma shows. As the World Turns, General Hospital.
We are showing our age right now.
My favorite two though were The Price is Right and Jeopardy. But rest in peace to my grandma, man. I miss it.
As a quick aside, I find it super interesting that all the racist people are mad at the diversity that's coming on As the World Turns, but that's just a quick aside.
Man,
Young and the Restless. I'm sorry, wrong show. Young and the Restless.
Shout to Luke and Laura though.
Yep.
Yo, but real quick though, getting back to our point though, when you look at those top 10, her question really, I don't know how we get to
Hey man, this is like a black cookout, baby. Conversations all over.
How we get to the young and the restless from Palantir, but we got there somehow. That's we got the young and restless from Palantir. But getting back to Palantir, I could see that happening.
No. But hold on, Jim. You said Berkshire Hathaway A. Now you also asked, what does Berkshire Hathaway B?
Yeah.
To see
I think Kamari bought a whole lot of those. He bought.
I bought one. I can only afford one.
For those who don't know what a lot is, what's a lot, Kamari?
One.
No, that's not. No.
No, for me, it's one. In stock parlance, it's 100.
Yes, and
I
when
only
you buy a lot,
one.
when you buy a lot, it's 100 shares. So Kamari bought 100 shares of B.
Excuse me, Mari bought one share of BRK-B. To be clear, stop playing with me, Jim. I'm about to dox Jim, man. He live in a rich part of town.
Whoa. All right, I'm gonna leave you alone, dog. We cool. I'm broke, baby. All right, listen though. With that being said, though, Berkshire is the more interesting one, but Palantir could make the top 10. Getting back to Miss Phoenix's question, though, I know we have some more questions up there, Kamari.
Yeah, I can get into them.
Yeah, but Miss Phoenix, I could see that based upon the government contracts. I don't know, hey, New Roma, love you guys. Thank you so much. We appreciate the super chat and also appreciate the kind words too. That's definitely
yes. And I also appreciate your presence because you're always here. So thank you.
Yes.
All right. So Don's got a couple, and again, we went over this one before.
That's a great question. Shout out to Falcon.
Right. All right. So Don said this one for me. Right. Jimmy was talking about the downfalls or the down markets. Right. There's no 20-year frame where the S&P 500 was negative.
That's true.
It is true, but I also think it's dangerous because
if you stay invested.
If you stay invested, but also over these last almost 20 years, the Fed has been pumping in money to keep the markets afloat. What happens when the Fed takes their foot off the gas?
Well, that's where diversification comes into play, and that's where my Bitcoin, if I had any, because I don't have any, but
you lost it in a boating accident, right?
That's exactly how I was in a boating accident, lost all my Bitcoin. Now, with that being said, though,
can you tell us what lake that was? Was that a lake, a river, or ocean? I want to go because listen, we might be able to find a couple keys out there.
I was in the white sand beaches of St. Thomas when it happened. You know what I'm saying? Or was it the villa in the Costa Rica? I'm sorry. Shout out to AZ though. Shout
out to AZ.
All right, yeah, I saw AZ live a couple weeks ago. I don't know if y'all know that, but AZ came out and anyway, I'm sorry.
I didn't know that. I didn't. So that's dope.
Oh, you didn't know that? AZ came out.
He came out.
He did Life's His Bitch. He did Phone Tap. Then he went into Sugar Hill, and I almost lost it. But that's either here nor there. You know what I'm saying? Me and AZ performed Sugar Hill, but it's either here nor there, right? Anyway, so but I understand why you say that, Kamari. That like looking at it's what what's the saying? Past performance doesn't
is an indicator of future results.
Here you go. That's basically what you're saying, right? That's basically what you're saying. But the Fed pumping the money, and the question I have is, when is the Fed going to stop doing that, right? The Fed's going to continue to pump the money, right? So that's the other part about this. Like printing money they're never going to stop printing money, which is why when you look at assets, right, alternative assets such as a Bitcoin or even a gold, which is why people who believe in those spaces are saying, I'm literally not saying that this asset's the greatest. I'm making a bet that you guys will not stop printing and pumping money into the economy. That's the bet that I'm making. I'm making the bet that you're not going to stop because you've shown me over time that you're not going to stop pumping money and printing money. So that's the other question.
Pump it up. I got you.
The other question, right? So now if you believe that, the S&P 500, and again, all assets are kind of a bet against that. When you look at how asset prices rise, it's really a bet against the dollar. So,
but I think, particularly for the stock market benefits or one of the most from all those assets, for all that cash being pumped into.
Yeah, but again, it's because the stock market, the S&P 500, is a bet against the dollar. You're saying that I'd rather be in this asset than to have the dollar because the dollar's value is going to diminish by you consistently pumping money and printing money. So if I believe you're going to do that, I still can buy VU, and my VU will go up in price because I'm betting that you will continue to pump money. That's literally what I'm saying. All right, I'm sorry. So,
No.
Down to your point, you're right.
Because people have to think about this type of stuff. Because at some point, we are going to have a market pullback, a real one. At some point. I don't know when. All right, so this is another great one for Don. How do y'all think life expectancy changes asset allocation for a 20-year-old could easily have 20, 30 years of investing life?
So that's true, right? That's true. That's absolutely true, right? So it depends upon like which do you practice that 4% rule, the old fire rule where you have 25 times your expenses and now you can pull 4% out. But for me, it really goes down to that person's specific situation, because the other part about having this capital is what are your expenses? What are your expenses? If your expenses are relatively low, then your situation could be different than someone who has high expenses, right? So you have to look at their overall financial health. But you're absolutely correct in looking at time frame. People are living longer, right? People are living longer. So when you live longer, you have to prepare to live longer. And that's the scary part, because people aren't preparing for retirement, or they're starting to prepare for retirement at such a so far behind that yeah.
That they're jacked up. But I mean,
they so far away. No, I'm sorry. Listen to the clip.
Marsha,
I'm about to start singing again. I'm sorry. Go ahead.
Lord have mercy. But I think life expectancy absolutely has a major impact on asset allocation. And Don said 60-year-old, right? So typically when you become 59 and a half, you can start pulling out your retirement funds without a tax penalty. Mm-hmm. So that's why that age is so important. Sadly, though, a lot of people don't have a lot of money set aside for retirement in their 401ks. Pensions are being obliterated. They're damn near non-existent. So people better get ready. But when you think about your asset allocation going into your retirement years, when you're not working anymore, and Jimmy brought up the 4% rule, that's also kind of a standard capital withdrawal rate for retirement as well. So you can live off of it. So let's say you got $1 million and you're pulling 4% out. So what's 4% off of $1 million, Jimmy? A year annually?
About 40,000.
Yeah. Mm-hmm. So when you think about that, right? If you got $1 million pulling out 4%, the 4% is there so you don't erode your capital, so you don't run out of money, you don't run out of cash. But is it really realistic to live off of $40,000? So you're probably going to need more than $1 million. And again, there's a lot of other things to think about with that, like Jimmy said.
The expenses, some people don't even need 40, right? It all depends on how you live. And again, this also depends on
most people will still need more than 40 though, even in retirement. Because again, the old adage of retirement planning was your expenses are going to go down, your houses are paid off. How many 70-year-olds are buying brand new houses in McMansionville?
No, I got clients buying brand new cribs in their 60s, right? You know what I'm saying? Like, so first of all, it's the reason that a lot of clients are older now is because that's where all the money is. Young folks ain't got no bread to buy a house because the houses cost too much. So a lot of my clients now tend to be older because they got the money.
Right. So again, it goes to personal finances, but I don't think people spend enough time on asset allocation. All right, Jimmy, I was thinking about saying something.
Listen,
I'm not going to say it.
You already started it, right? And you already started it.
No, you don't even know. What do you think I was going to start? Hold on. What do you think
I was going to say? Thank you for reaching, thank you for checking off the box of for one show. Every show, Kamari tells everybody.
That wasn't what I was going to say. That wasn't what I was
No, I'm just telling you, thank you for that, right? You hit the check mark.
But that wasn't what I was going to say.
Okay.
So all these folks, right, apparently are copying stock shows from somebody else.
Come on,
right?
Man.
But none of these other stock shows talk about asset allocation, except for us.
Come on.
I talk about it often. I'm just saying. Do the knowledge. The knowledge. Nobody's really talking about asset allocation.
I'm thanking you for just doing your check off, because once a show, you tell everybody how they don't.
He don't want to talk about what's going on in these streets.
Because I don't get involved in that. Listen, man, like I wish everybody the best. Let's. I
wish them the best too. But I listen. I believe in truth. I'm a fan of Malcolm X. Right. So one thing that should be talked about on all these stock shows is asset allocation and what it will mean to your money, no matter what stage of life you're in, because we all go through different stages of life. I was having a conversation with my son. He's in his 30s. He's got kids, right? He's asking me, should I stop saving as much and put more money in the market because the market's at an all-time high? And I'm like, no, save and invest. But you can't stop saving because you got to prepare for the rainy days because he's in business for himself too. You got to prepare for when your clients don't show up, when they don't want to pay. You got to keep your income stable so your babies don't suffer.
No.
But a lot of times people don't talk about that.
That's an excellent point. Saving gets lost in a lot of these conversations because a lot of these conversations are about flexing portfolios and building all this. But saving does get lost in this a lot because it's funny. I told you guys recently, I was just watching and they were talking about Russia's economy and how Russia's economy is being propped up by war. And they were going over
I think all economies are propped up by war.
But they were going over like the balance sheet of the country. And one of the analysts was talking about like how interesting it is when you look at a country or a big corporation and you look at like their balance sheet and how similar it is like managing your personal house to basically how a country or company manages your house. Like it's really simple when you break it down. You have money coming in, money going out. Yep. What kind of reserves do you have? Like those three things are the gist of it all. And
the reserves keep you afloat when the money coming in goes down.
Yes, and we can do all the different, play all the semantics and do all the different stuff and use all the different vocabulary and different formulas and models. But at the end of the day, how much money do you have coming in? How much money do you have going out, right? And what do your reserves look like? Are you prepared for a downturn? And when you look at someone's house, it's the same way as a country, right? What do you have set to the side if something happens, right? Corey often talks about this, and he talks about the word responsibility. Do you have the ability to respond if something happens? That's your savings. So I think savings is crucial. Now, again, my perspective is a little different because I save more than I invest, but some people call what I save in to be an investment, right? Because I save in Bitcoin. Because to me, Bitcoin is my capital, it's my money. But it's money. It's nonetheless it's money. So the fact is, it's important to maintain a savings, right? Because especially if you are in business, because if you have a downturn where you don't have income coming in, how do you stay afloat, right? People always talk about, and again, it became a buzzword too, all money in, I'm investing everything back in there. But what do you do if you don't have income coming in? Do you have reserves? Do you have reserves to keep you afloat? You know what I mean? If you look at the biggest corporations, first of all, let's look at the companies that make up, taking it back to the S&P 500, that make up the top of the S&P 500. If you look at those companies, one of the things they have is crazy reserves. They got crazy reserves. We just talked about Berkshire having over $300 billion in cash. Apple and Microsoft both have huge cash stockpiles, right?
I know the last time I looked, Apple was pulling in $1 billion a month, free and clear cash flow.
Yeah,
that's
so
crazy.
So my thing is like savings is something that gets lost in the hyper investment space that we've been in. But savings is absolutely important. Asset allocation is important. Also, the one thing I'll say is most
savings
important.
is a part of asset allocation, right? But there's the other thing, real quick, I want to touch on, Jim. Mm-hmm. You need savings, and I don't know if you said this, but I just want to say it again. You need your savings so you don't sell your stock, right, or your investments when something goes bad. Yeah. Because then you're creating one, a taxable event, two, you're potentially losing gains, right? Mm-hmm. Early because you're pulling out early, you're pulling out at the wrong time. And I know what you're thinking. I knew that was coming, right?
That's what she said too.
But again, your savings, your cash will keep you alive in everything from your business to your investments to your personal life to major economies. So there's a lesson there to learn. And I'm going to use that, by the way, Jim.
What's that?
When you look at how companies and countries run their ships, their financial ships, they're thinking about cash. They all got cash.
Hey, listen, man. In the words of Eric Roberson, those are the lessons.
Oh, there we go.
You see what I did there? That was for you.
I love it.
That was for you, bro. All right, man. So, any more thoughts, questions you want to get to, Kumar?
I don't know. Corey, you've been quiet over there. You got anything?
No, man. Excuse me. It's very important to have savings because, like Kumar said, it protects your investments. Those savings are actually protections for your investments.
Yeah.
So hold on to those savings.
So, matter of fact, I will say one more thing. Credit card debt. Credit card debt is up to like $1.2 or $1.3 trillion in the United States, right? Why is that? Largely, a lot of that is because people don't have savings. One. Yeah. Two, people don't think about what they're spending in its impulse buys, right? But let's think about emergencies. I know they got all kind of reports. People don't have $400 to deal with an emergency, $1,000 to deal with an emergency. What do they do with that? They put it on a credit card. They borrow money. and it always kind of throws them in a crazy cycle. And that's because they didn't squirrel away their money in the spring and summer and fall like the squirrels do.
Listen, man, the data says it all. The data says that like over 90+% of people do not pay their credit card off every month, right? And companies understand that. So it's interesting. I remember when Apple came out with their credit card and their high yield savings account, which at the time was paying like 4.5%, something like that, 4.8%, whatever it was.
And I bet their average credit card is probably 22 or 23%.
Exactly. So I start digging into their like 10Ks, and I'm reading through some of the information, right? And in order to get the high yield savings, you had to have the credit card, right? So, but
talk about a trap. Talk about a trap.
So the fact is, they understood the psychology. They're like, we'll give you 5%, 4.5%, 5%, because we know that you're going. Once we put this card in your hand, you're going to use it. You're going to be paying us 25%.
But not only that, that's so insidious. They're going to take your money and loan it back to you.
And by the way, This is the company that you buy phones from. This is a whole side hustle for them. This not even their main. You know what I mean? They sell iPads and iPhones. It's a side mission. They play in GTA. It's a little side mission we're gonna make billions of dollars with.
But you know what? To give my brother Jim credit, right? He does a wonderful job. Just shut up.
You timestamp this.
What?
Go ahead. Finish.
Hold on. No. I got you. I'm gonna do it for you. So give my brother Jim his credit, his proper credit. This is Kamari, Rory Murray, the finance rebel, right? Jim does a masterful job of explaining to everyone you should become the bank, because all the major companies become the bank at some point. You look at all the automobile companies, they became finance companies to make it easy to finance their own people. Look at GM, look at Ford, Mercedes, all of them. They have major finance operations. Apple, again, Jimmy just mentioned, major finance operations. And it makes sense. Your marketing machine is revved up. So we're going to sell you the product and we're going to finance the product. And we got the best credit of anybody on the street. So we're good to go. We're going to win across the board. All right, Jim, does that make you feel good, man?
I just want to say thank you for helping me with my Instagram post later, because that will be clipped and put on my IG page. So I did, I'm saying, like, thank you. I appreciate you.
Don't forget TikTok, man. Don't forget TikTok.
I'm not gonna listen. Shelby gave me a whole like talking to my digital consultant told me that I forget TikTok too much. So if Shelby's still watching, he's gonna go on TikTok too.
And I saw what you did on TikTok when I besmirched you over there.
Yeah. Okay. All right. As long as you saw me over there. Shout out to y'all. Yo, by the way, follow me on TikTok at JW Blueprint, and follow at Brotherhood on TikTok. You know what I'm saying? We on TikTok.
And the Black Wealth Rebels also.
That's right. All of it. all the things. Follow us on all the things.
All right. So real quick before we wrap up, does anybody have any questions today about the S&P 500 or investments overall? Go ahead and throw them in the chat, and we will get to them. I see a couple of things came up.
Thank you, Miss Edie. Miss Edie, that's appreciated.
All right, Diamond Dave's in the building.
Diamond Dave, hope we got a legend in the building. What's up, Diamond Dave?
All right, people do not have cash to survive, so they flow credit. I've been there, right? I mean, I think we've all been there, right? But the question is, do we stay on the rat race? Do we stay on the wheel, the hamster wheel? And just
Dave had a couple points up here too. He said the Fed will keep driving. Same thing I said. The Fed will keep driving money in the market. It will not stop.
It probably won't.
It's also a good point, right? He said, so if the Fed stops printing money, people will not have liquidity to buy gold or BTC, which is an excellent point, which is why within the Bitcoin space, it's like a whole ecosystem being built to actually use Bitcoin as cash, right? But the fact is, but your point is valid though. Like they need to keep printing money for this thing to keep going the way it's going. They have no choice.
Wow, we got a lot of comments from Luke and Laura,
which is why, right? So getting back to shout to Erica, she talks about this in her book, All Roads Lead to Real Estate. Shout to
Can you send me the link, sir?
Pause. I got you though. But so what Erica talks about in here is the idea of like hard assets. Pause that too. But which is why, because if you have a hard asset, right, it has a value just outside of like this constant printing. Because specifically with real estate and land, you have the ability to feed yourself. You have the ability to use the land for like its various use cases for it. So, but Dave's point is absolutely valid.
All right, Dina, I didn't know you're here. Welcome.
What's up, Dina?
Dina says they have the 55 rule where you can withdraw without penalty if you leave a company at 55. Sure. Speaking of 401k. Yeah, sometimes. And there's also things like 72T and stuff like that. but typically 59 and a half is the tax penalty free zone. But
I want to shout out Dana. Speaking of gold, I want to shout out Dana because Dana be like, Dana be rumbling gold and beating gold's head in. Like, Dina's in our village and she be in our trading chat and she be like doing gold dirty. So shout out to Dina.
But wait a minute, where is gold at now anyway? Isn't gold at like an all-time high, 3,500, something like that?
I know it cracked 3K, which is funny though, because when I dropped, by the way, there's a whole precious metal course in the village, by the way, that I dropped. And when I dropped that precious metals course, the gold was about, I think, 1,300 an ounce, and it's now over $3,000 an ounce. So shout out to everybody who doubled their money up because they was rocking with me. So I just want to, shout out to y'all.
Okay. All right. So let's see. We got. All right. So Miss Edie, I saw what you said, Miss Edie. I had it, then I lost it. Hold on. So Miss Edie was giving us some praise.
Miss Edie, it's definitely appreciated.
Yes, it is. Where'd it go? This thing be moving. All right, here it is. I love the banter. You guys share valuable information. Thanks. Listen, that's why we come here every week, several times a week, have a little fun, talk a little bit of money, a lot of money about. I don't know. You think we talk more about money or more about ratchetness?
It depends upon which day it is. Friday goes off the rails.
Well, throughout the whole week, like in percentages, we know Friday is 100% ratchetness.
Sunday we talk about money. Friday goes that show is like sponsored by Nate from Set It Off. Like that show.
Nate and Cuddy.
Call it the Nate and Cuddy show. Like that Friday goes off the rails. Friday, also known as the Nate and Cuddy show, goes off the rails. But Wednesday we tend to talk about money, and Sunday is our we talk about various money topics.
So we all right. So it's 1/3 ratchetness, 2/3
money,
positive money. Okay,
yeah. Is that a good mix? But here's the thing though, if you're in the village, we definitely have deeper conversations in the village. Like one of our last posts that went to the village, specifically like our pay tier, we did a whole thing about like the 5 most. What was the I forgot how you titled it, like the 5 deadliest people to black wealth. Like we get into some real deep conversations in the village. Yeah. And for those that are in the paid tier of the village, salute to y'all. We definitely appreciate it because that helps us do the work that we do in the community. But y'all get like unfiltered stuff. Regular people who are members, even the free members, like you get content as well. In fact, our last camp, every recording of our camp is in the village. So if you have kids or whatever, even free members get that. If you have kids and you want to sit and watch them, learn about money, all of that is in the village. And you join the village by going to blackwealthrebels.com. So go to blackwealthrebels.com. So our entire summer camp is there for all members.
And so it makes no sense that everybody's not a member of the camp, especially for your babies, right? Do it for the babies. Do it for
also, we got Saturday school coming up too, right? So we are back in the community. We're trying to look at an October, November, like start date, hopefully October. We're trying to do a Saturday class where we give mentorship for the youth in the community and teach them about money. So that's coming soon as well. So some investments can be considered savings/reserves. So Jarrell, interesting question, because some people believe that their investments are savings. What we're saying is have a bucket outside of your investments that is strictly for savings, right? But the reason I made that point is because the way I perceive Bitcoin, right? I operate on a Bitcoin standard. So I don't tend to keep cash, but I do keep Bitcoin, and I have my Bitcoin in different buckets. One is something that I'll never touch. And the other one is one that I will use because it's my savings, right? If I need, because Bitcoin is, I don't use the dollar as my measuring of money, the Bitcoin is, right? So that's what I mean by that. For the most part, for most people, having a side cash account, high yield savings account is probably best, because if you're not willing to do the knowledge, then you got a problem. But me doing the knowledge, I just decided that I'm operating on a Bitcoin standard. I don't even keep cash, but
All right, but now, I mean, again, Jimmy's point is spot on. Again, it depends on where you're at in your life also, where you're at in your finances, because I get people all the time that will say, I got $500, should I buy Bitcoin? And that's why I was originally classified as a Bitcoin hater and a real estate hater. People call me a hater for everything. Jimmy loves to give me the hate tag, but it is what it is.
Sounds to me like you earned it. I mean, you said that, not me. But I understand that perspective too, right? If you have $500, if you all you got is $500 to your name, you got all kinds of other issues, right?
Right.
2025, you got $500 to your name, and that's no disrespect because everybody starts somewhere. But if all you got is $500 to your name, then we gotta get some other stuff together. Like me and Corey were talking about like an actionable items checklist, right? And what goes on the actionable items checklist, right? Because we were in the community. Shout out to BMF, right? You know, BMF. We were in the community going to event for BMF.
That's a church, by the way, y'all, not the show.
Oh, no, and not the organization, because I don't want no smoke from nobody. I ain't got to try to get caught up in nothing.
Jimmy wants to be Big Meech.
No, whoa, doctor, no days. I'll show you right here. What does it say? It says, here it is, right here. Bible. Hey, put me on the big screen, Kamar. I want to share this because I don't want anybody. I'm not trying to get caught up in nobody's. So it's Bible. Hold up, make sure it's clear.
Oh, wait a minute. Pull it back a little bit. Right there.
Bible Ministries Fellowship. That's what it is. Bible Ministries Fellowship. So I'm just sharing this because, you know, they honored your boy with a certificate and all that.
It's funny though. It's funny because me and Corey were there too. But they
here we go. I was waiting for that.
I mean, it's cool though. It's cool.
But it's Bible Ministries Fellowship.
It's cool.
But it's Bible Ministries Fellowship, which has been around forever. But they've always called themselves BMF. It just so happens that, you know, that kind of got. Anyway, but at that event, we were in the community, and Corey was making a great point. Corey said, we got to be able to give people something that they can just like start to take action with, an actionable items checklist. And one of the things we talked about is in having conversations with people, majority of people that we come across, and I'm pretty sure that Corey Kamar will co-sign this, they don't even understand how much money they have coming in and what they have going out, right? So before we even get into the savings and investing and all the options and all that other stuff, how many people know how much money they have coming in and what they have going out? We got to take way a lot of steps. If you got $500 to your name, let's take a step back and figure that part out first before you start to try to make these exotic investments. People want to buy leaps and trade options and derivatives. And it's like, dude, how much money do you make and how much do you have coming? Like, what are your bills? And be honest about your bills, right? So that's what we got to start with for most people.
And our lottery ticket's your biggest expense on your P&L statement.
Anyway, man. So yeah, like to share. Thank you, Ms. Edie.
Yep. So I agree. I mean, and that's why I always say, just go back and look at 3 months of your spending habits, because most of us use debit cards. Look and see where you spend your money. Look and see where your priorities are. Once you see where your priorities are, it will open up a lot of things. Because
some of y'all gonna have a lot of crazy realizations on how much money. First of all, you can be like, "Yo, I spent that much on DoorDash." Some of them, our brothers in this chat, gonna realize how many $40 dates they go on.
No, I don't think the $40 dates get tracked at all, though.
You gotta track that too. My thing is this though.
Cash. That's cash.
But being funny and not being funny, if that's a thing that you into, budget for it. All right. So now the other part.
Or it might get tracked if it's sent through Cash App.
Budget for it. Just budget for it. That's all I'm saying. Now, the other part is, right, you're gonna realize how much. The one thing that the most realizations that when I sit down with people and I help them write out the budget, the biggest realization for most people, Kamari, is how much money they spend on food. That is always eye-opening for people.
Most people eat their food. They don't even realize it.
Eat their money, you mean?
Eat their money, I'm sorry. Yes.
But most people don't realize it because what happens is you do this, like I do this here, I do this there. They don't realize how many times they called DoorDash. They don't realize how many times they just ran to the store and grabbed this to eat. And when people realize how much money they spend on food, a lot of times it makes them sick. But it's even small things. Like I've seen people who go to Wawa, specifically in Philly, every day, and they don't track that as being anything. And it's like you look up over a month, dude, you spend a couple $100 on coffee.
That could have been an investment. A couple $100 in SPY or something else. Again, not investment advice. But I want to get to this question because this is a good one. And this is a tax question, actually.
What's up, Ryan?
Ryan Wells says, if I have a large amount of mutual funds in my non-tax advantage account, should I move it to ETFs? It depends. Most times, no, though. Yeah. Most times, no. Because, and this is only if you have gains on this mutual fund, you're going to create a tax situation for yourself that don't need to be created. Yeah. So Jimmy brought up, what was the Vanguard ETF you brought up?
VFIX. So I'll give you a great example. So within our investment club, right? So we own VTSAX, right, which is a total stock market fund. But what we decided to do was, because when I kind of gave them the same education Kamari did, we said, okay, so let's move to VTI. VTI is the ETF equivalent of VTSAX. We said, let's not sell VTSAX because we got gains here. We're just going to put this to the side. All future contributions, though, go to the ETF version.
Right, so, because again, it's going to create a tax bill for yourself.
You don't want that tax bill, Ryan. So what I would say is, if you can find the equivalent ETF of that fund. And a lot of these ETFs, specifically if you're within the Vanguard space, a lot of their mutual funds have an ETF equivalent, right? So VFIAX will be the S&P and VOO will be the ETF, right? So VTSAX is the mutual fund and VTI is the equivalent, right? So there's a number of them, whether we're talking about VNQ, VHI, but that's not the point. The point is, find what the equivalent is and all your future contributions, just put that into the ETF, and not tax advice, not investment advice, but that's how I would approach that.
So this is the actionable item. Assess your situation first, right?
Yes.
That's what we're going to do. Just like in medicine, when you go to the hospital, they do triage before you get seen by a doctor, before they take any action. So you got to do financial triage on your situation. See what you need to do, see what's going on, then make a decision. So I would say, look at your what it is, how much, what's going to happen if you sold. You should know the data. Like Jimmy loves to talk about data all the time. I agree with him. Know what's going on, know what will happen. Then see what would happen if you stop contributing to that and move to something else. Because listen, taxes are probably, if not the most biggest enemy to wealth creation overall. Mm-hmm. Don't give Uncle Sam any extra money that you don't need to.
That and racism. But I digress. Well, I like that term, financial triage. Usually, a show called Financial Triage, where we take like one portfolio and just go financial triage it. But
I'm down with that. Maybe
sharing this intellectual property on the. We got a ton of folks watching. I shouldn't be sharing this intellectual property out loud, but I like that idea though.
We can we get people to volunteer their portfolios, and you'll get 3 different perspectives, right? Because Jimmy has a perspective, Corey has a perspective, and I have a perspective. So you can figure out what's best for yourself.
Corey gonna tell you take the whole thing and take the Eagles -7.
By the way, between FanDuel and all these other game things that are coming out, we are in trouble, man. I think
we did a show about it 2 years ago. That sports betting is the new crack cocaine.
We did, or y'all did?
I think you were part of that too. Sports betting is the new crack cocaine, yo.
But it's not just sports betting. I mean, you look at they're making you buy games and potentially win payouts through PayPal and all this stuff. Like, no, Anonymous is about to see it.
Go through the hood in Philly. I was at a Poppy store and they had the slot machines in there, and there was a line for them.
Yep.
The Poppy store was the size of like a bathroom, and they had like a bunch of slots. It's like.
So it's like, damn, the lottery ain't enough. We want to get all that money. We want all that money. That's what the government's saying.
Listen, man, wealth is built through discipline and consistency, right? So those that have the discipline to stay away from those things, and those that are consistent, will build wealth, right? But we're gonna have a lot of betting zombies out there.
Oh wow, that yeah. You know what though? We got a lot of investment zombies too.
Miss Edie says, need a little ratchetness daily. It's a lot going on. I need laughter. So
Jimmy's co-signing this 1,000%.
Listen, because I'm all about balance. I like to have fun. I am a money nerd. I'm a money nerd, right? But I still, it is what it is.
So,
Thank you.
As we go on the ratchet spectrum, right? A lot of y'all know this already, but if you don't know this, Jimmy got me going on my ratchet-esque book novels in Audible. So yesterday I go see my aunt. This is also a Black wealth story. She turned 75, y'all. 75 years old.
Salute to auntie.
Yep. Salute to auntie. My auntie is a Carl Weber fan.
Ooh.
She reads the hard books, and I'm like, yo, auntie. So I get
shout out to my nephew Nas too. Today is my nephew Nas's birthday.
Shout out to Nas. But so a lot of y'all don't know this. So Jimmy got me going down a rabbit hole of Ashley and Jaquavius, Carl Weber. It's a whole thing. It's turned into a whole thing now. But now my auntie was like, listen, you gotta read Black Hamptons. And I'm like, nah, it looks a little too soap opera. She's like, but it's so good. You gotta read it. So I'm gonna get Black Hamptons.
All right, is that our next read, Kamari? I'm gonna jump in there with you. Pause. Like, that's what we're going. Now, by the way,
Black authors, supporting Black authors.
Support Black authors. By the way, this all started because you're gonna stop blaming me for your rabbit hole, right?
I will not.
I was telling Kamari that my favorite author is Jaquavius Coleman, right? And then him and his wife, Ashley.
Well, say it again for the Summer Jam screen. Say it again.
Yeah, listen, I was telling Kamari, I said, yo, my single favorite author is Jaquavius Coleman. I love him and Ashley. Ashley and Jaquavius are my favorite authors, right? And I was telling him that the way that their literature gets treated is kind of unfair, right? Because they are writers and they get put in this whole little box of street lit. But when you read their writings, it's so much more than that, right? So if you read The Cartel, it's one thing, right? But once you get past The Cartel and you get into these other books that they've written, it's like there's all kinds of stories about trafficking, about just life, everyday life, and it's so relatable. And I think they're my favorite authors. And I was talking to Kamari about this, and I put him on a couple books. Murderville, the Murderville series. Like, if anybody else wrote these books, they would be called crime novels or things like that. But because they're people that look like us, they put them in the street lit box. And I was telling him how great writers they are. And he went down a rabbit hole and he got addicted. And now he read all their books, and then he took it a step further. Next thing I know, he's like, "Yo, I'm reading Carl Weber. I'm reading this person. I'm reading that person." So I unlocked the world. But it really was just about the idea of how our authors get treated, because they're phenomenal writers across the board.
Phenomenal.
Right? They're phenomenal writers across the board. And how with the boxes they get put in is kind of unfair. But I digress. But if we read
that happens with most Black creatives, which is really, really sad, right? When you put it that way.
Yeah.
Yep. But I will say this: what was the latest book from Jaquavius? Drop Jewels.
And Drop Jewels. Drop Jewels
is a great book. I think it's a great book.
No, it is. It is.
And I think, and let's be honest, that we got a lot of street folks in our community with our folks. I think a lot of people will get the gems he's putting down in that book.
Yeah.
I highly recommend it. All right, so you down to get down with me for Black Hamptons?
I'm on it, bro. I'm on it.
All right.
This day, the 10th. I get new credits on the 15th anyway. Plus, I've been heavy on Libby right now. Man.
So Ed said, Donald Goins, tell Auntie she's got them all. Iceberg Slim, Donald Goins. I always get them too confused, by the way. But
she got Daddy Cool?
Probably. So like my aunt used to collect, like she used to have all the videos back in the day. So instead of going to, what was it, West Coast Videos, or what was the joint back in the day before Blockbuster?
West Coast Videos. That was the red joint, right?
Well, Arrows, Blockbuster Videos.
Oh, Arrows. I remember Arrows. They was yellow and black. Yo, you really didn't yourself.
My aunt used to have a whole wall. She's living in Southwest Philadelphia. She would have a whole wall of VHS tapes, So I really am dating myself. And people will come check the tapes out from her crib. She was that popping, y'all. So she moves that to books. So she's got all the street books, all of them. So, all right, I'm off my soapbox.
I may or may have not been involved in an organization called Gym Busters that sold DVDs, but I digress. That's for another story. That's behind the wall. I can't.
So is it JIM Busters?
Yeah. I can't. I gotta talk about that. I gotta talk about that behind the wall. That's gonna be in the village. The story of Gym Busters will be a documentary in the village, though. But let's just say that there was 4 figures being generated on a weekly basis. But I digress.
Got you. I see there's a couple I missed. All right.
SPLG.
Yep.
Godfather Part 3. QBC. Sublime. I'm sorry. I don't want to set Corey off. Corey might jump up and start performing, so I'm going to chill.
All right. So I know Miss Edie said that she cut down a lot of her subscriptions. Here we go. I just ended subscriptions I don't remember I purchased.
Man.
That's something else that is robbing a lot of us.
Man.
Jimmy,
good job, Miss Edie. Good job.
Jimmy wants to try to slander me, though. I know this is coming. Come on.
I'm not going to say nothing about you having more subscriptions. You and Jabbar got more subscriptions than anybody I know.
All mine's are investments. It's all business.
Okay.
All tax write-offs, baby.
You got it.
All right. Wow, Miss Edie got back $250. So hopefully you invested it, either in savings or something that will appreciate over time. Everything is a track. Everything. I agree with that, Don.
Track everything. Yeah, track everything. You got to.
Yep. Lottery tickets and FanDuel. Yeah. People eat out every day at work. Yeah, they do. It's funny. A.G. Gassens talked about that in his book, Black Titan, and how he started loaning people money, and he started selling people food at his job when he was working in the mine, I believe it was. Mm-hmm. So people have had these same issues for decades.
Shout out to A.G. Gassens. Rest in power, supreme legend. That book, The Black Titan, is an excellent read too.
All right, where your volunteer? Oh, all right, Jarrell. Send us a copy of your portfolio to blackwealthrebels@gmail.com. Blackwealthrebels@gmail.com. And we will definitely do, what did you call it, Jimmy? The segment.
You came with the thing, financial triage.
Triage. All right. So yeah, we'll start a new episode of
We'll keep that behind the village though. We don't want, that'll be a member show. You gotta be a member.
Yeah. Yep. That's fine.
Only.
That is fine. That is fine. All right. All right, making my tea and lunch. Eat it home. Yep. That's a cheat code. That's a cheat code.
Right, healthier too.
Create the logo and the t-shirt. I love that. Financial triage. You said it here. Yep.
Here we go.
All right, yes, in the Bronx, the bodegas allegedly have illegal slot machines in the back. Listen, it's a real thing now.
Yo, I think in Philly, I think they legalized it.
It's legal in PA.
It's like they have to meet. I forgot the criteria, but if it does something but not something else, it's actually legal.
Well, I know. So I got some people on the gaming board. Like it's a real thing. It's under the gaming.
They call it a game.
Yep. All right, we got that.
Yeah. Auntie checking out Donald Goins. Yeah,
75 is a blessing.
Daddy Cool was wild. Daddy Cool was poking everybody up.
All right, Black Hamptons, the show on BT is amazing. So here's my thing. Again, I'm a Carl Weber fan. I started with The Family Business. I think it's an amazing series. The show, not so much.
I love the show. I think it's
really?
different.
I like the show because I love the books, but I'm just like, you missed something here.
I like it. But here's the thing, though. I think it's different. I think the books are better. Absolutely, the books are way better. But that's almost everything. I just don't like being that snob. You ever see a movie? You tell somebody I saw the movie, or you have to read the book. The movie doesn't do it justice. Like I don't want to be that snob. Yes, I do. The book is always better.
So, Miss Edie, I'm guessing you're talking about Jaquavius Coleman. So I will throw that in the chat right now. That's who Jimmy was talking about. You could also look up Ashley and Jaquavius because again,
it's Jaquavius, not Jaquavius.
Sorry, it's Jaquavius. Because what they do is actually a Black wealth story as well. It's him and his wife. They are a writing team, but they also have separate books that they do on their own, right? But it's all a team. It's all a team and what they do.
It's definitely a Black wealth story.
All right. I think Dope Fiend is Donald Gordon's best novel. Bro breaks down the mindset of a fiend.
I agree with that 1,000%. I read all the Donald Gordon's books. I own all the Donald Gordon's books, right? But that book is really like where he shows his talent because it's almost like, people who missed the layering, right? So I told you we listen to a lot of the clips. But one of the things about like Malice always gives both sides, right? And JC was good for that too. The Dope Fiend, so a lot of people say Donald Goines books are just like, trauma porn, but the Dope Fiend goes into the mindset of a fiend and why people were fiends. So his talent definitely was shown throughout that book. So I agree with that, Ant.
All right, fellas, I got a hard.
Yes, sir. All right, cool. We about to get out anyway, but go ahead. We hold the rest of it down, man. Corey got to go save the world.
All right, answers every gas station down here.
Or just do things for my children. I get with y'all, man.
All right, bro.
All right, have a great day, man. Say what's up to the family.
Yes, sir. Ant says every gas station down here where I'm at in Texas, those electronic slot machines are everywhere. Yeah, games of chance is what they call them now. Games of chance. Mm-hmm. And that's how they get away with it. Yeah, that's his name right there. Just look him up.
Yeah, the books are always better. Yeah.
Yeah, books tend to always be better. You know what I mean? Like even the Harry Potter books.
All right. Yep. No, I got it. I got you.
Otto Kamari got on me. Pause. Told me I need to stop reading Harry Potter and I need to read. What's the name of the series you told me? You said.
So I just finished one. There's several.
The one you told me you called it. I'm gonna tell you what you called it. You said it's the Black Harry Potter. I got the first book.
No. So hold on. There's a couple. So you got Children of Blood and Bone. Excellent.
No, that's not the one I'm talking about. I've read that.
I got you, but that's a great series. It's about Black folks reimagining themselves. I'm gonna tell you about the one I just finished, literally this morning. This one I got on book 2. And this, oh damn, where is it at? All right.
Program was directed by Josie.
That's not what I wanted.
You definitely just finished. I hear the audible sign off on there.
Yep. So Blood at the Root by Ladarian Williams.
Yeah, that's the one I'm talking about. That's the one you told me.
It's the first book. He came out to a part 2 for that.
I didn't finish the first book.
Yeah, and so then that's Blood Bones at the Crossroad, and so that's more of Black futurism, Black history meets magic. If you like that kind of stuff, I think it's awesome. I think it's awesome.
All right, so I'm gonna finish that book, but I'm reading so many books right now, man. Like, but again, I just finished Erica's book. I finished a couple books, man. But right now, what I'm currently reading, I'm still finishing. I'm more than 2/3 of the way done. Why Should White Guys Have All the Wealth? That's the one. I did finish that book about Philadelphia corruption. That one is done. And I got a book on Libby too. What I'm rocking with on Libby. This book is called Wrong Place, Wrong Time by Gillian McAllister. So, you know what I'm saying? 10% of the way done that. So I'm always reading multiple books, but that's kind of where I'm at with it now.
So Nathaniel, I'm not sure what you're speaking to.
He was talking about Corey. When Corey said he had to pull out, he said he wasn't saying that anyway. That's just about Corey.
Yeah.
He got stuff going on.
He might have been on FanDuel. He might have been running some parlays.
All right. My PC is friends with the woman who wrote Children of Blood and Bones book. Oh, okay.
Listen, that's what is her name?
No, I got the physical copies, the Audible copies, and I love those so much. I got the trifecta. I got the physical, Audible, and Kindle.
So did you finish those?
Yeah.
What did you think about them?
It's phenomenal. It's phenomenal work.
Okay.
Those are phenomenal. I just didn't get through the other one because I got so much, and I didn't even finish the one with the sister talking about what's the other one that we was reading? Because again, this is what I get for doing multiple books at a time. I need to buckle down and just pick which one.
It's hard, man. It's hard.
That's what she said.
Oh Lord, here you go. Here you go. Mine out the gutter.
Oh, We Refuse. That's the other joint. We Refuse.
We Refuse that work. I love We Refuse.
Yeah, I'm about halfway through. And Jarrell, you are right. Jarrell, I owe you that conversation. I didn't forget about you. We got to jump on a call. Me, you, Kamari, and Corey got to jump on a call to figure out, because we want to do our book club in the village, right? And we pick one book. And so that's what we're calling it. It's not called that, but we're calling it that because it has a lot of the similarities, but it deals with things.
But I mean,
relevant.
So it's funny. Children of Blood and Bone by Tomei Adeyemi. I believe that's the one. But you could kind of call that Black Harry Potter, but the one he's talking about is by Ladarian Williams, and that is Blood and Root, and that's set in America. Children of Blood and Bone is set in Africa.
Yeah.
Samuel says S.A. Crosby, also great Black author, crime thriller. Okay. Any famous books you like?
Let me see.
Where should we start? By the way, what is everybody reading? Throw that in the chat since we hear overtime. We're definitely overtime now, y'all.
I never read an S.A. Crosby book. That's interesting. I appreciate that. Good looking out, Samuel, because I don't think I read any of his books.
All the Sinners Bleed is what's coming up.
I see a number of his books.
King of Ashes.
I don't think I've ever read any of his books.
Razor Blade Tears. Blacktop Wasteland. Okay.
Yeah, I'm gonna get on that. Appreciate that. Good.
Thank you.
I never finished. Although I have finished, I finished over 20 something this year. So they doing slots real hard out here in Georgia gas station. Oh, so it's everywhere. So that's a new epidemic, huh?
So I don't really think there's a middle class anyway. There's rich and there's poor, but they're really, really, really trying to make it rich and poor. And they're basically trying to exploit the poor as much as possible. Or what's called the middle class and place them as poor. All these things.
Where Are the Men? Jacqueline Clark. All right, I got more books. Where Are the Men? All right, so
that's what you read now, okay?
No. I'm looking at what Dave said. Where Are the Men?
No. Yeah, I asked, what is everybody reading right now?
Okay.
All right. All the Sinners Bleed was really good. Okay. So that's the S.A. Crosby book.
All right, so I gotta save this Jacqueline book. I gotta say that because I gotta go back to that. All right, that's what's up, y'all. All right, man. So listen, that was the S&P 500. That's what's going on in our world. We definitely gotta get our book club set up. I don't know what the first book of the book club gonna be. We think the first book we should be reading as a part of our book club. I don't want to do.
We've talked about this before.
Yeah.
I think I said.
Oh, you said Black Fortunes. Black Fortunes.
I think I would still go with Black Fortunes because I really think Black folks need to be able to see and imagine folks wealthy and what it really takes to do that. And then there's a whole plethora of other books we can go to, but
yeah, I see you got some of them behind your head, right? So
yeah.
Black AF History, 1619.
I think we definitely should get with this.
I think one that everybody should read, and I just had this conversation with a colleague in real estate. The Color of Law is one. Boom, you just brought it. I didn't even know you was grabbing that, bro. That one right there.
We're on the same page, right?
That one right
there. Out of sausage, mate.
I think every adult should read that book because that gives you an understanding of kind of like just how where we are now, how we got here.
I agree. I agree. Well, I mean, what were we just talking about the other day, Jim? And I was saying, like, no Black person should pledge allegiance to the streets. I know all the street dudes are going to hate me for that. But I always say, me and Jim were just talking about this, redlining created the quote-unquote streets, all the boundaries, all the stuff, because what we were talking about was neighborhoods in Philly and how they all were basically derivatives of gang culture and things like that.
Yeah.
And then Jim said, well, who did that? I said, redlining. The powers that be, right? And so that's my biggest problem with worshiping streets. You're then worshiping white supremacy. You're worshiping the enemy. But I don't want to go too deep, y'all. I don't want to go too deep.
So, I mean, it is Sunday.
I guess. All right, is the book club starting with the Adams Combs book?
Adams book.
What book is that?
Adams Combs. Let me see. Maybe we talked about so many books.
Yeah. All right, Thinking in Systems by Donnelly Meadows. I got to check that out.
Yeah, that sounds interesting.
Systems thinking is definitely where it's at and where it needs to be.
I gotta see where all the men. I gotta see like what's the because that's an excellent question. I don't know what Miss Jacqueline is talking about, but I think I'm going to find out.
Wait a minute, Harlem Shuffle, third time. Harlem Shuffle. What's Harlem Shuffle?
Harlem Shuffle, third time. Okay, all right, I appreciate y'all with these books, man.
Oh yeah.
Oh, he said he read it for the third time. Okay, I'm looking for a third version. All right, Colson Whitehead. Okay, I get it now. My apologies, I misread what you said. The book, The Harlem Shuffle. I guess he said he read it for the third time.
Okay, so that means it must be good. It must be good. All right, and learn from where we went wrong and make the corrections.
Exactly. I'm looking at this book. It's funny because this book is like on my list, but I've never read it. I gotta go down my wish. I got a wish list of books, right? And sometimes like I'll add something new and then I'll grab that, but I never go back and see the stuff that I never added. This has been on. So all right, I've had this on there for a couple of years now.
All right. So Dina says just finished Millionaire Next Door this week. Great book. A lot of what we talk about actually is directly from Millionaire Next Door. It works. It works. Great book. What were your biggest highlights from that, Dina? Let us know. Has anybody else read that book, by the way?
A gazillion times. Bill Brother Bill. Listen, Bill Brother Bill is one of the foundations of everything I do, man. I'm not in my library right now, as y'all can see, so I can't grab all the books. So
I don't think I'll finish this the whole way. I need to go back.
Kamari. First of all, shout out to the legend, man. Shout out to Leon Sullivan. But Leon Sullivan drew with that book too, though, because the size of the book, but his text is so small. So the book is actually a longer book than it actually looks because the way the text is written in there, man. But shout out to Leon Sullivan.
I mean, but the book came out what the 70s?
Yeah, he wrote that.
That was when everybody had good eyesight.
So when everybody had good eyesight. But shout out to Leon Sullivan, man. Leon Sullivan is a absolute inspiration for me personally, especially being in this area. So that book is one of those books, Jarrell. So take your time with that. The book is hard to find too. Like you may have to go with eBay. Sometimes it'll pop up on Amazon too.
So all right, so it's copywritten 1969. 1969.
Yeah, most of us weren't born.
All right, Jarrell says I'm a slow reader. That's fine. What's the rush? Just get the knowledge.
Yeah, it's a good one. It's one of them ones.
Yep. And I mean, so Bill Brother Bill, I feel should be on the list too. So we got Black Fortunes,
Bill Brother Bill,
Bill,
Bill Brother Bill,
Black Titan,
Black Titan. What's the other one? I know it's one that Corey's going to say.
I mean, I can just start pulling down books.
Isabel Wilkerson's book. He's going to say that it has to be up there too.
Cast or Wealth of
Cast.
Okay.
Cast.
Yeah. I'm down with that. I mean, we can just go through my book right now and start there.
Well, you just want to stun on me because I don't have my books behind me right now.
No, actually, you started this because you said all the books Maury has in his background.
But I've got a couple thousand books right here, though. You know what I'm saying? So, yeah, I mean, I keep this with it. Yeah, I mean, I got a couple thousand books on the Kindle right here. So,
So I can't read Kindle, man. I can't do it.
I told you, Kindle, Audible, physical is what it is, man. So yeah. Anyway, man, listen, thank you guys for, we had an extended show. We got into a bunch of different topics. It started with the S&P 500. Somehow we went to Young and the Restless. We went to Ashley and Jaquavius, but this is what happens when you tune into our lives.
Here's a question, real quick. Here's a question. Which S&P 500 company has a hand in book publishing? I want to see if anybody can answer that question for the next show. I got to remember to ask that. Probably a lot of them.
Are you probably thinking of something that I'm not? Because I think it's an easy answer.
Okay. I mean, besides Amazon.
All right. I was about to say that's an easy answer right there.
Yeah, besides Amazon.
All right. You saying besides that? Okay.
Yeah, but yes, this was great, y'all. Go ahead and take us out, Jeff.
No. I just want to say thank you guys. We appreciate and love you guys. This Wednesday, Wealthy Wednesdays, Wednesday at 8 p.m. Friday is Friday at 7 p.m. We do our Bitcoin giveaway and our Freedom Friday. And every Sunday, we're here at 10 a.m. for a class, a free class. You know what I'm saying? We do classes behind the wall as well, but free classes every Sunday here. If you are not a member of our village, please join the village by going to blackwealthrebels.com. A lot of content information will drop there. We are building that up as we speak. And we appreciate those that are members of the village already. You guys are helping us build this out. But a lot of content back there, a lot of conversations. The full camp from this year, summer camp, is back there. Thank you again for everybody who helped us make that camp a reality. You guys literally changed lives. So that is dope. Saturday school coming soon. Also, we still got our other mission that we do in the community as well, which is our cash mobs and pod class. We got another one of them coming up in the next couple months. So, just want to make sure you guys stay in tune with everything we do in the community here in Philadelphia. We're looking to expand. Our first place is probably going to be Baltimore. We're going to do some sort of event in Baltimore.
With our sister.
Yeah, with our sister, man. Shout out to her, man. Because she's doing amazing work.
Now, Jim, real quick before we leave, let's remind the folks what you got to do in order to win the Bitcoin giveaway going forward.
So in our Bitcoin giveaway, so for those who don't know, for the last several years, we've given away over $50,000 with the Bitcoin's current price in Bitcoin, right? So we've given away about half of Bitcoin. But we give away Bitcoin every Friday as part of our show on Friday. To win the Bitcoin, you have to be a member of the village and shoot us an inbox. So what happens is we do a random drawing. The person that wins, we just send in a Bitcoin. We do this every Friday. When you win, you go into the village and shoot us an inbox with your Lightning address, and we send it to you that Friday. So you have to be a member of the village in order to win our drawing. You could be a free member because, again, we do have free memberships, but you just have to be a member, right? The reason we're doing this is because we want to support the folks that support us, and we do a lot of giveaways. We give away money. Listen, over the last several Fridays, we've given away over $50,000 in Bitcoin. We've given away several $1,000s in groceries. Like, we literally would give away groceries, right? So we've given away groceries.
We need to get back to that, too. Yeah.
We get back to that, too, man. Let's do some more grocery giveaways, man, because groceries are expensive. So we start giving folks, like, Instacart gift certificates. Like, our way of giving back to the community that helps us do everything we do. We take the money and, like, literally give it back to the people. So Diamond Dave, for those who don't know, make sure you go to Diamond Dave. David Williams, the retail trader. Go to his YouTube page and follow his YouTube. He is an absolute legend. And the game that he gives is second to none. I've learned so much from Diamond Dave through the years. So I want to make sure everybody goes to support Diamond Dave as well.
Absolutely.
With that being said, we love you guys. We appreciate you guys. Check us out on Wednesday at 8 p.m. I have no idea what we'll be talking about, but it's something regarding money. You know what I'm saying?
Money. And black wealth.
Yeah, and black wealth, right? You know what I'm saying?
All right.
Miss Maui, I said that earlier. So I didn't realize that you had emailed it because we were trying to get everybody to inbox it, but I did see your email. So you have to resend it because the Lightning addresses, like, they only last for a short period of time. Because that's why I was saying everybody, I was looking on the inbox, but then I didn't realize that you had emailed it. So, but Miss Maui, like I said, you could text me. Miss Maui, you got my number. Send me a text with the Lightning address. Send me a new one, and I'll get you paid today, right away. So send it to me now, Miss Maui. I got you.
All right, y'all. Everybody have a great day. Y'all stay great. Be blessed.
Love y'all.